Welcome to everyone. This week video will cover the S&P 500 for the week of March 17, 2025. Before we start, make sure you read carefully the disclaimer. On my March 3rd update, I mentioned the S&P 500 is on his way to his 18-month cycle low. We also expected the S&P 500 cross below his 40-week cycle line. Let's see what's happened since, and more important, what to expect in the near future. Let's start with the 20-day cycle. During the same update on March 3rd, we expected the next 20 days low to form on March 17th. On this cycle, the bearish trend continue as expected. The S&P 500 is so bearish, then it was very difficult to identify the 20-day cycle peak. We can label this peak on March 3rd, 6 days early than expected, which confirmed the bearishness of the market. We can expect the next low of this 20-day cycle on March 20th. Then the S&P 500 should rally toward his cycle line. Technically, the S&P 500 supposed to cross above his cycle line, providing an upside target. But due to the bearishness of the actual market, there is the possibility the S&P 500 use his cycle line as resistance. On this table there is the cycle line and their potential upside target if the S&P 500 cross above them. With 5 successful signals out of 6. The success rate for the 20-day cycle is so far 83.33%. The 40-day cycle. On the 40-day cycle, there is nothing new since my last update. The next 40 days low should form on April 13th, the blue vertical dashed line. This week the S&P 500 should start a rally toward his cycle lines. The last 40 days cycle low was on February 28th. With 2 trading signals, which both was successful, the success rate for the 40-day cycle, since the beginning of the year, is 100%. Here are the cycle lines for this week with their potential upside target if the S&P 500 cross above this week. 80 days cycle. The S&P 500 meet and exceed his potential downside target zone. Confirming the February 19th high was a major high. The next 80 days cycle is still expected for the March 22nd, the purple vertical dashed line. Let's see on the roadmap what to expect for the next few weeks. After forming his low around March 22nd, the S&P 500 should start a rally toward his cycle line and use them as resistance, before resuming his decline on his way to form the next low at the end of May. With the 2 trading signal, one negative and one positive, the success rate is 50% for this year. The 20-week cycle. Like expected during my last S&P 500 weekly update, the crossing below his cycle line has been confirmed. The crossing occurred at 5,953.27, providing a 5,759.11 target. The target has been met the week after the S&P 500 triggered the trading signal. Because this 20-week cycle peak occurred on the left part of the cycle, this explained the sharp decline since the all-time high. With one successful signal, the 20-week cycle have a 100% success rate. The 40-week cycle. By crossing below his 40-week cycle trend line, the S&P 500 confirmed the February 19th high at 6,147.43 was at least the 40 weeks peak. According to the Hurst rule, when the market crossed below his cycle trend line, or what he called VTL, this also confirmed the peak of the next higher degree cycle peak has formed or in formation. Since the VTL was the 40 weeks VTL, the next higher degree cycle is the 18 months. We can with a very high degree of confidence label the February 19th high as the 18-month cycle peak. We were also expecting the S&P 500 cross below his cycle line, giving a target for the next 40 weeks low and certainly the 18-month cycle low. The crossing occurred at 5,796.96 for a 5,446.96 target, 350 points, or 6% of potential profit. This target is basically right on the 18-month cycle line. Since the 40 weeks peak occur on the right part of the cycle, what's Hurst call right translation, we can expect a moderate correction for the 40-week cycle. The 18-month cycle. On the monthly chart, I placed on red the 40-week cycle target. Technically, during the next 18-month cycle low formation, the S&P 500 should find support on his cycle line. On the very short-term basis, this will represent a decline of 11%. But if we take the all 18-month cycle, this will represent only a 34% of retracement, which is for a long-term cycle, consider it a normal retracement. Since the last 18-month cycle low on October 2023, the S&P 500 have a rally of 2,044 points or 50%. If the S&P 500 cross sharply below his cycle line, then we may have to reconsider the last 54-month cycle position, and we may expect more decline. In conclusion, the S&P 500 is on his way to form his next 18-month cycle low. The 5,446.96 is the next downside target. If you enjoyed the video, please give it a thumbs up to support my channel. Share it with others, and subscribe so you don't miss any important updates. This concludes this week's video. Thank you for following along. And I'll see you next week with another exciting installment.